So what's happening in the California housing market since our last update at the beginning of August? Well, that's what we're going to dive into today. The California Association of Realtors released a report towards the end of last week that goes over all of the recent data for California. It goes over month-to-month data as well as year-over-year data. What does that mean? Is it a good time to buy? Is it a good time to sell? Well, that's what we're going to talk about. We're going to look at the numbers. We're going to see what's happening with pending sales. We're going to talk about prices. Are prices still continuing to rise? We're going to talk about days on the market. Are they still continuing to trend down? Are we starting to see a crack where days on the market are going up? We're going to take a look at those numbers, and we're also going to look at a report for Orange County, California, where I'm located. As I've mentioned several times, I'm located in Huntington Beach, California. And we're going to take a look at the numbers here in my local market to give you an idea of what's happening in my area. But before we do that, I want to take a minute and introduce myself. My name is Jeb Smith. I'm a real estate broker here in Huntington Beach. And my channel is all about real estate, helping buyers, helping sellers navigate that home buying, home selling process. So if you're interested in all things real estate, do me a favor, hit that subscribe button. And if you like the content, give me a thumbs up. It really helps get out there to more people and helps me accomplish my goal of educating buyers and sellers. And leave me a comment if you have questions about the data that I'm providing, you have additional questions, you think I'm crazy, whatever it is, leave it in the comments below. I always go back and take a look at those and try to create some dialogue. I'm here to see it from other perspectives as well. I don't just believe what I'm reading is the only view on real estate, but at the same time, provide facts, because that's what I'm doing. I'm providing data. That's where my information is coming from. So let's take a minute, pull up those reports, and give you some insight on what's happening in California. So as promised, let's dive into that report from the California Association of Realtors with regards to August numbers. I'm going to put a link in the description below if you'd like to read the entire article. I highlighted some things that I think are important. We'll read over those, but the entire article is below if you want to check that out. Click that link. But for now, let's pull up this report and take a look at it. So this, again, is directly from the California Association of Realtors. It says California housing market continues recovery as median home price breaks $700,000 mark. So existing single family homes totaling $465,400 in August on a seasonally adjusted annualized rate. That's up 6.3% from July and 14.6% from August of last year. So we're up 14.6% from this time last year. Those are big numbers. As it said here, August statewide median home price was $706,900. That's up 6.1% from July and up 14.5% from August of last year. Year-to-date statewide home sales were down 6.8% in August. So how are home sales down when everything else is trending up? Well, we lost 2 months of the year. We lost half of March, pretty much all of April on stay-at-home orders. And not a lot of real estate was happening during that time. So that's one reason. While numbers are probably lower, you also have a lack of inventory out there. There's a lot of buyers, very high demand, but not a lot of property to choose from. That is also probably playing in to that, those numbers being lower than what a lot of people think they should. So let's get into some of the highlighted parts here. Even all of that I might not read, but again, the link is below if you want to read the entire article. So California's housing market continued to improve in August as home sales climbed to their highest level in more than a decade, as the median home price broke last month's record and hit another high. So we've been up 3 months in a row. We continue to keep breaking that median home price record, and we sit above 700,000 in California, first time ever. That's big. California's strong housing recovery in terms of sales and price over the past few months is encouraging, as motivated buyers are eager to purchase homes amid the lowest interest rates ever, which led to the fastest sales growth in a decade. So basically they're saying this is all being driven by low interest rates. It also goes to say that, however, persistently low housing inventory will continue to push up home prices due to heavy buyer competition. So between inventory and interest rates is why you're getting this crazy market. The statewide median price hit another new high after setting records in June and July. As we mentioned a minute ago, it broke the $700,000 mark for the first time, reaching 706,900 in August. That was a 6.1% jump from July and 14.5% from August of last year. So last August, median home price was 617,410. This year it's 706,900. Huge, guys. That's, all of those people that waited last year to buy thinking there was going to be a crash just lost essentially 14% increase in value. So those are big. Let's see, low rates and tight housing inventory are contributing factors, which we mentioned, to factors to the statewide median price setting a new record high 3 months in a row from June to August. So month over month, we've set new highs. It does say, reflecting the rise in home prices, consumers continue to say it is a good time to sell. So you've got a lot of people out there saying now is a very good time to sell. We've talked about that in other videos. Now is a great time just because there's not a lot of property to choose from. Buyer demand is high, all of those things. There was a survey conducted in September. 58% said it's a good time to sell. That was up from 54% a month ago and 46% a year ago. As far as buying, 34% of consumers who responded to the poll believe now is a good time to buy, sharply higher than last year when 22% said it was a good time to buy. So now people are saying it's a good time to buy as well, and that's due to low interest rates. Now, I'm not going to talk about all of the regions here in California. I'm going to focus on Southern California because that's where I am. But Southern California regions increased 5.5%. Respectively. That's in sales. So sales are going up. At the regional level, almost all major regions posted double-digit price increases from last year. San Francisco had the highest median price increase, rising 18.7% from last year. Central Coast, 16.4%. Southern California, 12.9%. Central Valley, 12.2%. The far north recorded the smallest price from a year ago, but still improved year over year at 8.3%. So even the worst region increased 8.3%. Active listings continued to decline significantly in every major region. Central Valley had the biggest drop of 53.1% from last August. So inventory is down, or active listings inventory, however you want to look at it, is down 53% from this time last year. SoCal, 52.4%. Central Coast, 47.9%. Far North, 46.1%. San Francisco Bay Area, 37.1%. 30-year fixed mortgage interest rate averaged 2.94 in August, and that was down from 3.62% in August of last year. So down 0.75% since last year. That's a lot of buying power, guys. That's why people are able to purchase more homes this year than they were last year. This is median sold price of existing home sales. So August of this year, 615 in the Los Angeles area. July, it was 590. August last year, it was 545. Month to month change, that is 4.2%. Price year over year, 12.8%. Sales month to month change, down 1.7%. Sales year to year change, 4.4%. So why are sales going down month to month? Probably due to a lack of inventory. Also, kids going back to school. There's, people are trying to figure out what they're going to do there. That all plays a part in it. Now, Southern California is going to include Los Angeles, Orange, Riverside, San Bernardino, San Diego counties. But August, 640 was the median sold price, 622 last month, 567 a year ago. So month to month, 2.8% change. Year to year, 12.9% change. Again, sales are down 1.8%, but sales year to year change is up 5.5%. Now, Southern California region, I'm not going to go over every single one of these. I did highlight them all, but I'll focus on Orange County because that's where I am. But we're also going to get into some more data, some real deep data here on Orange County in just a moment. But Orange County, 930,000 this month. It was 880 last month, 810 last year, 5.7% month over month, 14.8% year over year. Sales were actually up 3.4% and month over month, and 13.7% year over year. And I believe that was it for that one. This goes to talking about unsold inventory index. So, this is basically how many months of inventory you have. And it's saying somewhere around 2.1% is how much available inventory we have. A normal market has somewhere between 7 to 8 months of available inventory. So you can see how far we are down with regards to inventory. And this goes over it as well in more depth for Orange County. So 2.4%, 2.5% last month. So we're, month over month, we're less available inventory. Last year we had 3.5% at this time, or 3.5 months rather. And this year we have 2.4 months. So not a lot of inventory, guys, but let's take a look here at the monthly indicators for Orange County. So this is important stuff. If you're in Orange County, this is showing you what's happening in your market. Now, it breaks it down in detached versus attached. So detached is going to primarily be single family homes. Attached is going to be some attached single families, but also condos, townhomes, that sort of thing. So new listings. Now this talks about August of last year and August of this year. So this is year over year change. So, we're up 1.7% in new listings year over year. So we actually have more inventory this year than we did last year. Year to date last year, 25,357, year to date, 21,627. So that's a 14% change overall for the year. But month over month, we actually went up in August this year versus last year. So pending home sales are down 37% from last year to this year. And year to date, we are down 6.3% in pending home sales. Closed sales were up 10.6% from this time last year, but we're down 1.4% overall. Days on the market. This is where this is stuff, important stuff here, because, the lower those days on the market, the hotter the market is, right? And so last year we were somewhere around 46 days on the market. 46 days on the market. This year we're at 37. So that we're down almost 20% from August of last year. And year to date, we're down about 6.5%. So 44 days on market. Year to date is the average time that properties stay on the market. Median home sales price. I'm not going to read every single one of these because I feel like it's you guys can look at this as I'm looking at it, but median sales price increased 13.3% from this time last year in detached homes, up 14.8% year over year. Average sales price up 11.2%, and currently at $1,256,256, and up 3.9% on the average sales price year over year. Available inventory for homes. So we're down nearly 30%, 27.6% in inventory. Not a lot of inventory out there. In our month supply, we're at 2.9% from August of last year, and that's down nearly 24%. Attached looks pretty similar. New listings. We have more listings this August than we did August of last year, but as a year, we're down 11%. Pending home sales down 43.1%. from this time last year. Could be a number of things, but what we talked about is just not a lot of available property out there, and that's playing into buyers being able to get property. So down 6% year over year. And let's go down here. Days on the market down again, nearly 28%, 11% year over year. And then we'll talk about inventory is down nearly 13% from August of last year. And then we're sitting at 3.1 months of available inventory. This is new listings, year over year change, detached versus attached. So, the thing to look at is the average here at the bottom. So we've actually got nearly 15% less homes, less inventory than we did last year in detached, and nearly 11% in attached homes. Pending sales are down 6% for a 12-month average and 5.8% for attached. But, August pending home sales down nearly 38%, down nearly 44% in August. So that could be a red flag for a lot of people. But is it because people aren't buying, or is it just because there's not a lot of inventory to choose from? That's what we have to figure out. But to me, it has a lot to do with not having the available inventory to choose from. Because if you go over here and look at closed sales after looking at pending sales, closed sales, are up nearly 11% in August for detached, and up nearly 9% for attached. which shows that. And days on the market again are down, 20% in August from, the previous month, and then the same thing for attached. So median home sales price, as we said, it went up 13.3% in detached, 10% in attached. And that is going to be the majority of what we're going to look at here. So percent of original list price received. I think this is important too, because, a lot of people are like, well, people are pricing their homes way too high, and you're seeing a lot of price reductions and what have you. And the reality is not really. I mean, people are getting in August 98.4% of their original list price received. So that shows you that you're not seeing a lot of price reductions out there. 1.9% change from the previous time. But 98.4% of the list price, which is huge. And the last thing we'll look at here is inventory of homes for sale. So August, again, you're down nearly 27.6% on detached and down 12.1% for attached. So that's why it is a good time to sell your house. If you're considering listing, there's not a lot of inventory out there. It doesn't mean you can ask, whatever price you want for your house, but it does mean that you have the ability to probably get multiple offers on your property. Chances are you'll probably get pretty close to your asking price there. When we just saw 98.4% of the list price is what's happening on average. So, I mean, that's if you price it correctly to start, right? That doesn't mean you can just price it at whatever and get 98.4%. It's got to be priced correctly. And that's why working with a professional, and they can help guide you through that process. So that's the data for California and Orange County. Provided the housing market continues to thrive. It remains very, very stable. As of right now, the one thing we're starting to see is a little less buyer demand based on those numbers. But is that because there are less properties available and just not enough properties to go into escrow? Well, that's my thought on it. I mean, I'm working with a lot of buyers right now who've been putting multiple offers. We've had a very hard time getting offers accepted. So it's not a lack of trying or a lack of buyers wanting to buy property. It's just a lack of available property out there in certain price points. So my belief is, as you see more inventory come to the market, you're going to see buyer demand stay steady. And if you saw some huge increase in inventory, which I don't expect, I think you would see buyer demand increase because rates are going to remain low for the foreseeable future. Within eighth quarter, 0.5%, they're not really going to go anywhere, and they could trend lower. So, the interest rates will remain low. It's just a matter of what's going to happen with inventory. But I do believe if inventory increases, you're going to see buyer demand stay with that, and you're going to see a very similar market as we head into the end of the year. Now, normally as we head into fall, you start to see a slowdown in the housing market. And that's because it's the end of summer, kids are back in school, there's a lot less going on. But now you have kids at home. School district isn't as big of a deal as it has been in the past because everything at the moment is virtual. So, everything I read, all of the gurus I listen to, these people know way more than I do and are way smarter than I am with regards to housing, think that, our summer market is essentially going to become the fall market this year. So normally our spring market is the hot time of the year. Summer is again hot, and as we move into fall, it starts to slow down. Well, we lost the spring season this year, so summer is becoming that spring season, and the fall is essentially going to become what summer was. So with that said, I expect housing to continue, but I will update you as we get new numbers on pending home sales, on existing home sales, as well as any updates on inventory. And if you have additional questions for me, again, leave them below. And if you haven't already, hit that subscribe button. Give me a thumbs up if you like the content. But as always, I appreciate you taking the time to watch. We will see you again soon. Have an awesome day. Bye-bye.